Hey, what's going on, guys? This is Daniel.
And this is Sam.
And we are the Kwok Brothers.
Brothers.
In this video, we're going to give you guys a summary of what we think is going to happen with the 2022 housing market. We're going to bring all sorts of facts, figures, and different angles and kind of give you a synopsis of what's going to happen. And then at the end, we're going to talk about an angle that honestly we haven't seen a lot of people talk about on YouTube when it comes to the housing market. Nobody is talking about this angle.
And yeah, we're going to do some little bit of rapid fire summary of what's happening. You know, we got interest rates rising coming up. The Federal Reserve already announced that 3 to 4 times they're going to raise the interest rate and what that's going to do to the housing market. And we're also going to talk about the fact that a lot of YouTubers are talking about housing market crash, the bubble is over, and we're going to dispel some of that with you guys here in this video.
Yeah, well, here's what's really interesting is, obviously you mentioned just now the interest rates rising.
Yep.
A lot of people are anticipating a, 2 or 3 times rise in 2022.
Right.
But survey shows, and I actually saw this survey being cited from, there's a couple of YouTubers that I actually think have credibility to speak on the housing market. Most of them are not really in the day-to-day real estate market, but there's 1 or 2 guys, one of which I'm citing, ran for governor, that's a hint. He actually said that there's a survey saying that if interest rates were to rise by 0.5%, a sample study of about 10,000 potential homeowners say that they will actually be more inclined to buy a home if the interest rates are going higher.
Now, as far as the actual mortgage rates, it has gone up for the last few weeks. For the first time in a long time, we're seeing mortgage rates above that 3% mark as far as 30-year fixed. So already, we're kind of there in terms of the actual consumer side of lending as far as the interest rates on mortgages.
Well, I have a theory as to why, even despite rates going up to 3% again, as to why people still want to buy. Because at the end of the day, what is the biggest fear of the average American? It's, hey, I don't want to overpay for my property. We saw a generation, older than us that bought their house in 2005, 6, and 7. And they paid the financial price. They had to sell a lot of things, had to liquidate. But I think that fear amongst our generation, the millennials, is kind of being faded away because we're seeing stuff like, low supply. We're seeing stuff like construction costs and supply chains.
Another thing to consider, and this is actually the psychology of what buyers are thinking about, is that they're coming out of renting for the most cases, especially our generation. So if they're used to paying, let's say, $2,000, $3,000 a month on rent, and they look at the monthly mortgage payments and they're seeing more like $1,500 or $1,400, even though the housing prices are well beyond above the average that we're looking at, I think a lot of people are not necessarily shopping on price, but rather on the mortgage payment versus the rent.
Yeah, well, I think that's been consistent really for the last 30, 40 years, right? I mean, that's the mindset of the Americans. But what I was going to say is that, these individuals, they're seeing 3 to 5 years ahead. I mean, it doesn't take a genius to tell you that the average American probably knows that, hey, we have a construction shortage right now in labor and also just materials, but we also have supply chain issues. And these things are going to keep the cost of a home relatively high for the next 3 to 5 years. So I think your average, and I'm not saying I think that, but I think your average American is looking at that, especially in our age range, of saying, hey, if the prices are going to be this high for the next 3 to 5 years, maybe I'm not overpaying. Maybe I'm not over. Maybe I don't have to have this fear of it's going to pay, and all of a sudden it's going to crash by 40%. I'm going to lose everything. That's what people are really afraid of.
I don't really think that's in the horizon anymore, just because the demand's still there. We don't have a credit issue like we've seen in 2006, 2007, 2008, where banks were frivolously just lending loans without any job, or if you were alive back in 2005, even if your credit score was down in the dumps and trash, you can still qualify for a loan, whether it was for a first mortgage or a second mortgage. It was pretty bad.
Well, the statistic says that the average American has $75,000 more in equity than they've ever had before. The median credit score right now is at 781. I mean, and at the top, right? Absolutely. At the top, of all of that, if you look at the central banking system, the amount of reverse repositions that are happening right now in terms of the note market is unbelievable. I mean, we crossed 1 trillion. Banks have more cash to do. I mean, obviously very clear looking at the bond market and how low the yields are. So there's so many things that a savvy average American can just do research for half an hour and see that, hey, maybe I'm not overpaying. Maybe these houses are going to stay. Well, on another angle too, and and this is not the big angle that we're going to talk about at the end, but let's face the music with this whole stuff with the metaverse and virtual reality and doing everything from home. I mean, people want bigger homes nowadays. People actually like being in a single family home as opposed to being cooped up in an apartment.
Yeah. So talking about price, we'll stay there for a little bit. And I know we just mentioned interest rates are going up. Yeah. I do believe that if the Federal Reserve does increase interest rates by, let's say, 3 to 4%, which I presumably expect sometime around next month or March, Fed's going to come out and say, hey, we're going to increase it by 0.25%. I think during summertime, when things are peaking a little bit, they might just go for 0.5% increase. They might. I'm saying, I mean, at minimum, they'll probably go for another 0.25%. And then probably during third quarter, around September, October-ish, right before the fiscal year starts and ends, they're going to increase by another 0.25%. So it's kind of mirror what we did back in 2018. I think how that's going to reflect to the price, we will see a price cool down just a bit. It'll be a little warm. You know, it won't be like a huge 10, 20% downtick, but we will see the prices cool off just a bit, because when interest rates go up, a lot of people are going to be priced out in terms of their mortgage payments. They won't be able to make those payments in terms of interest rates going up. So I do see the prices going down a bit. Again, all real estate's local, depending on where you're at. You may see a bigger swing than what I've just mentioned, but I think that's definitely in the realm of possibility.
I think a lot of people forget too, historically speaking, you know, since 2008 up until now, 2022, the U.S. population has increased by roughly 10%.
Yeah.
I mean, we're talking 30 million people that have, you know, an increase in population. I mean, that's what other country is posting those type of numbers. And on top of that is we had such a construction shortage of single family homes since 2008 for obvious reasons.
Yeah.
So, I mean, you know, taking all that into account and looking at the home ownership rate, you know, I agree, Sam. I think, you know, there's going to be a small downtick in single family house pricing. I think rent in 2022 can potentially skyrocket for these reasons.
It will.
You know, and
it certainly will.
Absolutely.
And I think, so sticking with single family, I think single family rents are probably going to be the biggest like increase we're going to ever see. I'm just pulling up a data from Redfin here, and right now, and this is looking at 20 years of data between 2000 to 2022. And right now we're seeing the national investor market share. I mean, these are landlords, investors, big organizations. It could literally be, you know, your average Joe investor, or it could be BlackRock buying all these properties. Right now we're seeing the biggest and the largest market share for pretty much all asset types. But what's really surprising to me, there's never been this big push for investors, and they're buying lots of single family. Right now we're seeing 19% of all single family residential being purchased by investors. And surprisingly, a lot of them are offloading these multifamily 2 to 4 units. A lot of these investors, whether they be an individual or an institutional investor, are focusing on single family. And the next thing is they're focusing on condo and co-op. And last but not least, they're focused on townhomes. So really, instead of going down the multifamily route, a lot of these investors are buying up single family. And if you were to ask me, I think they're betting on the fact that rents are going up on single family for the next 3 to 5 years.
Yeah.
What do you think?
Well, here's the big angle that, you know, we talked about towards the beginning.
Yeah.
In reference to that chart, nobody talks about, well, who are these investors that are buying? I think when people say investors, a lot of individuals think, oh, it's the BlackRock of the world, right? It's the
Fundrise,
Fundrise,
big
right? It's the
companies,
Blackstone, and no, not the Japanese anime band. But, you know, a lot of people, they think these big, well, interestingly enough, the biggest buyers of these single family homes that are for investment purposes are not millennials. It's not big institutions. It's Gen X investors who own 3 to 5, you know, less than 5 single family homes.
Wow.
These are the types of individuals that are buying up single family homes right now. And I mean, real estate is extremely popular right now with the Gen Xers, which, you know, I mean, there could be a conversation that could be had with, hey, like, are millennials not interested in real estate investing? Are we more interested in the NFTs and, you know, the crypto market? Because if you think about alternative investments, real estate has always been the top of that conversation.
Yeah. So why do you think the Gen X are going after single family specifically? Of course, the data suggests, you know, a lot of our own data and research suggests, and what we're conclusive about is that rents are going up for single family. Yes, the prices are high, but I think rent rates will catch up to where it will make sense. But why exactly do you believe Gen X?
Yeah, I mean, first and foremost, a lot of people can say it's a generational difference. You know, I mean, for guys like me and you and people our age, I mean, the number one investment thing they're talking about is NFTs.
Yeah,
right. In crypto, right? With Gen Xers, they can't shut up about real estate. I mean, all they're talking about is real estate, real estate, real estate. And sure, are there apartments, and sure, are there multifamily? But at the end of the day, where's equity the strongest? Well, it's in the single family home. You know, at the end of the day, people are always going to want to live in single family. And maybe not 15, 20 years from now, but I'm talking about the mindset of a Gen X investor. So again, a lot of things point towards single families being strong for the next 3 to 5 years. And maybe that's what they see as well.
Also, guys, another thing to consider is that not only these single families are being used or bought by families, but they're also being repurposed to short-term rentals like Airbnb, VRBO, or also being rented out by rooms, which a lot of times do become more profitable for the person that's buying.
Well, let's also think about this too, right? Because that's absolutely right. There's never been more opportunities in various ways to make money off of a single family house than ever before. But you also have to think about the other side of the coin, which is the capital markets. Because if all these Gen Xers are going after these houses, well, I don't blame them because think about what are their options. I mean, put it in a bond at 1%, put it in a CD at 0.5% if you're lucky. I mean, put it in stocks that's super volatile right now. I mean, where else were they going to put their money? And Gen Xers, again, obviously are very big believers in real estate. And if you're talking about an asset that is a very good, strong tax shelter, if you're talking about an asset that probably won't plummet in price the next 2 to 3 years, and if you're thinking about a pretty safe bet when it comes to your money and protecting your money with strong equity, and at the end of the day, everyone needs housing. So if I'm a Gen Xer, I would probably do the same thing and go after single family houses.
So as far as some takeaway, guys, from this video is one thing, we're going to see interest rates go up, which means that prices will come down, but it won't be a crash. It won't be a bubble bursting. Prices will go down, but not massively. And if you are considering selling, maybe you've been holding off selling because, the price is going to continue to climb up and maybe you're waiting for the right timing. I think right now is a time because interest rates are going up, and like I said, prices will come down, but it's really hard to predict as far as how much it will swing. Because again, a lot of times real estate is local, and in your local area, it might swing harder than some of the other areas that I'm thinking about.
Well, and here's my takeaway, and I only have one, right? If you're considering buying a home, if you're trying to figure out what your next move is for you or your family or spouse, look, I hate to say it, but in 2022, whether you're renting or you're buying, you're going to pay a fortune. You're going to pay an arm and a leg. I mean, our personal rent has gone up. We live in the same apartment complex. My rent's gone up $250. Right. And it's probably going to go up again here like 3-4 months. So whether you're renting, you're buying, just know that over the 30-year market cycle, you're probably going to be paying more than what you're going to want to. Now, with that said, let us know your thoughts in the comment section below. Are we completely wrong? Are we completely right? What would you add? What would you subtract? Anything else, Sam?
Well, not really, Daniel, but if you're still lingering on that question of should you buy a home in 2022, yes or no, click on this video right here where we made a video explaining should you or should you not, some of the pros and cons, and we'll see you there.
See you guys.